Hey everyone, welcome to another episode of The Remote Real Estate Investor. I'm Michael Album, and today I'm joined by Rich Fettke, who is an author, investor, coach and mentor, surfer, among many other things. And Rich is going to be talking to us today about some of the mistakes he's seen investors make, the value of having a coach and mentor, as well as what you can expect to find in his book, which is soon to be released. So let's get into it. Rich, what's going on, man? Welcome to the Remote Real Estate Investor. Thanks for hanging out with me.
Good to be here. Great hanging out with you.
No, super excited. So before we hit record here, you and I were chatting a little bit about some sports we both share in common, but I would love if you could give all of our listeners a little bit of insight into who you are, where you come from, and what it is that you're doing in real estate today.
Sure, absolutely. My name's Rich Fettke, and interesting the way we got into real estate investing. I'm an investor, and my wife and I also have a company that helps investors. But that was what really got us into it was despair. It was exactly 20 years ago. I was on top of my game. I had a book deal. I just signed with Simon & Schuster. I was a business and personal coach, had a thriving coaching practice. I was giving keynote speeches all over the country. It was like I was just crushing it, and I felt so good. I was 37 years old. And then I was diagnosed with melanoma, which is an advanced skin cancer. But that's not the biggest deal, is that they thought it spread to my liver. So they had me do a CT scan and an ultrasound, and it kept showing these masses on my liver. And so I met with an oncologist, and he said, it looks like you got about 6 months to live. And we had a 10-year-old daughter. Yeah, it just rocked my world. I had a 10-year-old daughter, a 3-year-old daughter. My wife is amazing, but she was a stay-at-home mom. And so she was freaking in the sense of, what am I going to do financially if Rich dies? And so she had, as a coach, we were doing things together. She was also a trained coach. And so she had this small radio station in San Francisco that she used to do a radio show on about all areas of life, being your best self and personal development and all. And she said, I got to figure this out. So she started to have people on that were financially successful and was interviewing them about how did they create wealth and how did they create financial success. And most of them turned out to be real estate investors. No surprise.
Really?
Yeah. So she came home all excited. One of them was a mortgage broker. And he said, if you get your license, you can become a mortgage broker. This is about 2003. So, things were still, the mortgage world was pretty easy back then. So she went and did that. In the meantime, we figured out I had a PET scan, which is the most advanced scan for cancer, and it showed me cancer-free. So it was a false diagnosis. It was just hemangiomas, little clusters of blood vessels on my liver. But that was enough to go for those 3 months of not knowing if I was going to be alive. It was enough to give us the kick in the butt to get out and make things happen. So Kathy and I, after I was healed, we started to invest together. We bought a bunch of properties in the Dallas, Texas area, and it just took off from there. And then Kathy started to help other investors with their mortgages. We had a bunch of friends and family saying, tell us, how are you doing this? How are you doing this out of state investing? Yeah. And so we formed a group that we thought would be just a small group of family and friends and people that listened to the radio show. We thought it'd be a couple hundred people, and today it's over 64,000 members now at Real Wealth that we're helping invest. It's pretty cool.
That's amazing, yeah. Rich. Good for you guys.
Yeah, we're grateful.
So I'm curious, in your coaching business, before you got diagnosed, did you ever come across real estate investors?
That I coached? Yes. Yeah. And my mindset was, I want to invest in real estate someday when I have enough money. And so, and I was thinking I needed, several $100,000, to buy that first rental property or the first investment, not realizing the power of leverage and how much banks love to lend money on real estate. And so that was the eye opener for us.
Okay. I love it. And what made you go remote? I mean, you and your wife are living in San Francisco. Why did you pick to invest outside California?
Actually, Robert Kiyosaki. It was because Kathy was on the San Francisco radio station. She was, and it got bigger and bigger. She was able to attract some pretty big names. And then this guy who had just written a book called Rich Dad, Poor Dad, not long before that, and he had this cash flow game that he was promoting. And we had a friend who was his distributor for the cash flow game back in the day. And so he was on the radio show, and he warned Kathy's listeners to sell their overpriced California properties and to invest in Texas. And so we took his advice. We didn't sell all our expensive properties, sadly, because 2008 crushed us with our California properties. But it was, he's just saying for cash flow and what's going to happen. He was kind of calling out what was going to happen in 2008, 2007. That's what sent us out of state.
Love it. So you also recently have written a book, haven't you?
Yeah, I just finished my second book 20 years later. Well, I had an audio program back then too, but it took me 20 years to write my second book, and it's called The Wise Investor. And it's a lot different than my first book that was mostly coaching focused. It was a nonfiction, basically a personal development book. And this book is a modern parable. So it's story form, and it tells a story of creating financial freedom but also living your best life.
That's awesome. And why did you decide to write it?
Interesting process. I've had my own coach to walk the talk over the last 25 years now. I started coaching 25 years ago. And this coach that I still talk to every week or every other week now, he had read my first book. So he's always kind of knocking on me saying, when are you going to write your next book? When are you going to write your next book? And I was like, I'm too busy running this company. We have 27 employees. But then what we did is we applied story branding to our company. Are you familiar with that? Story branding? It's
No.
a guy named Don Miller. He wrote a book called Building a Story Brand. And it's all about basically telling the hero's journey, Joseph Campbell's work, using the hero's journey, just like great movies do, great books do, weaving a story where your customer is the hero and you are the guide. So the company is the guide. You help your customers. And so we changed everything on our marketing around that and how we served our members as being the heroes. And I just got into this whole storytelling thing. I'm like, this is fascinating. The structure of how to write a story, a compelling story that engages people, that elicits an emotional change, all that. And so one day in a coaching session, I said, if I was going to write a book, I'd probably tell a story. And then he heard that and he's just like, what do you mean? Tell me more. And then that was the spark. So then I got obsessed with it. And I'm like, I could write a parable about what I've learned over the last 20 years as an investor, what I've learned in the last 25 years as a coach, and kind of weave them together into a story.
How cool. And without giving away too much of the book, I mean, what should people expect to find when they get a copy?
Basically, it's about this family man. His name's Ryan Brooks, and he's like a hard worker. He's got a wife, he's got a couple kids, and he's making a decent 6-figure income, maxing out his 401k, but he has no time for his wife or his kids or even his life. And he's not investing. He's basically what we call today a Henry, right? A high earner, not rich yet. So he's...
I love it.
Yeah, they're out there. There's a lot of people, especially in California where I'm based, and that make a lot of money, make a good income, but they're not rich, they're not wealthy, and they're not investing their money. They're spending it on things. And so this guy is in that same trap. So he just starts to learn he meets this new friend and mentor who takes him out on adventures, of course. He takes him out climbing, takes him out mountain biking. And in these sessions, when they're having fun together, he teaches him about investing, about how wealthy people think, how rich people operate, and how poor people operate and think. And he really goes over the difference between, truly wealthy people and people with a lot of money. He even says, I know some people who are so poor, all they have is money. And I see that in Malibu, where I live, there's a lot of money. And some of the people are really stoked and really happy and getting the most out of life and investing their money. But some of the people are grumpy and miserable. And, that's rich in money, but not in life. So there's a lot of lessons about helping Ryan Brooks, and his mentor walks him through this on how to invest, how to really look at life through a different lens. One of my favorite things a mentor says to his mentoree is about assets. And he just kind of puts it in a different frame. He's like, assets are anything that will provide you income or better health or happiness or time. And a liability is anything that detracts from your income or your health or your happiness or your time. So it's kind of that type of perspective is, this mentor is like, he's the me I hope to be in the future. He's that wise investor who's, he's got it all together. He's got this sage advice He's very stoic, but he shares these lessons. So it covers the journey of 5 years of when they first met, and Ryan Brooks is struggling and just doesn't know what to do. And it shows 5 years later what happens and how he becomes wealthy in more ways than just money.
I love it.
And money too.
I love it. I love it. And Rich, where can people find the book?
It's on Amazon, all major booksellers, published through Rich Dad Advisors. So Robert Kiyosaki wrote the foreword for me, which I'm very grateful for.
Nice.
Yeah, and a nice come full circle, right?
Totally.
Yeah, so it's on Amazon. It's called The Wise Investor. Subtitles: A Modern Parable About Creating Financial Freedom and Living Your Best Life. I have the cover right here. So it's out on ebook. This is what the cover looks like.
Perfect.
So it's out on ebook. But the printed version, the hardcover, and the audiobook won't be out until August. And it's because of, just like real estate, supply chain issues. There's not enough paper at the printers. So it's a long wait. It's like 7 months now to get a book printed.
Holy smokes.
Isn't that wild? Yeah.
Okay, well, for anyone interested, get your order in now because it might be a while.
Right, yeah. So hopefully it all comes out in August. Hopefully it comes out earlier in August. But yeah, and the audiobook was a fun challenge for me, a big goal, because it's a story and there's 10 different characters, females, older people, young kids. So I had to learn some voice acting skills over the period of a couple months and really practice it.
Oh, how cool.
And I think I pulled it off. We'll see how the reviews are.
Right on. That's great. Well, Rich, I'm curious to get your opinion on something, because you're a coach. I will also work as a coach. And
Nice.
There are folks out there that say you can take the horse to water, but you can't make him drink.
Absolutely.
And so thinking about kind of the Henrys out there, and I think a lot of our listeners might find themselves in this boat too. They have friends, family, folks around them that don't get real estate investing.
Right.
I have a 6-figure job. I got a great job. Why would I bother investing? I can make more money at my job. So what do you say to all those people? And really, how do you position investing in general, or real estate investing specifically, to the people that think they have it really good as things stand?
Yeah, I mean, first of all, as a coach, I'm going to help point out what is good first. That's just the way I coach, the gratefulness piece. And, it's like, wow, be stoked on that 6-figure job or whatever it is. And it's about creating freedom. And so many people don't have that freedom. And that's what the Henrys don't have. If they have a short runway, if they lost their job, which we've seen happen, they don't have many months left of cash flow to be able to live their lifestyle or any type of lifestyle. So that's the biggest thing, would be that, do you want to create freedom for yourself and not have the stress of losing your job, or wanting to move to a different job if you're not loving what you're doing? A lot of people stay trapped in their jobs because it's like, this is my income. This is what I need to make ends meet. So that's the biggest thing. It's really about having your money make money so you can create freedom in the future, freedom of time and everything. I think that's the biggest one. And then flipping on the other side, there's something too about America and the world that we are pre-programmed. When we think invest, we think stock market. And, I have nothing against it. Kathy and my wife and I are invested in the stock market, but our major focus and the big aha back through that story is, we were doing that. We were contributing to our IRAs and, doing everything we were supposed to do, investing in the stock market. But when we learned about leverage, the power of leverage, and how you can 5x your money, just through the power of leverage, I mean, that's a standout. And that's one of the lessons the mentor goes over in the book. He has Ryan compared to, say you have $200,000 to invest, and you invest $200,000 in gold. You put $200,000. You buy maybe $400,000 in the stock market on that. You just leverage it, and then you invest that same amount into real estate. And then he kind of plays it out over 5 years, over 10 years, sorry. And so he's like 10 years later, and he said, so how much would the gold be worth at the same appreciation that gold has been at? And they look at that outcome. And he said, oh, now let's look at your stocks. And he looks at that, and it's like, good. He's got a decent return on investment. He's like almost tripled his money. But then the real estate, he looks at it and he's 5x'd his money and more. And then he's like, and that doesn't include the cash flow. It doesn't appreciate all the depreciation write-offs and the tax benefits. So it's kind of like an eye opener to be like, oh, wait a minute. Now I see that angels sing about investing in real estate and all those amazing benefits.
Totally. Totally. Yeah, that makes complete sense. I'm curious, Rich, to get your thoughts on when looking for a coach, because I think that that's something that some people have trouble wrapping their head around. It's like, oh, I don't have a coach in life, and so I would never be inclined to go get a coach or pay for coaching. And so
Yeah.
if people are inclined to do so, or if people are okay accepting that, what are some things they should be looking for when selecting a coach or a mentor or whatever, someone to help walk them through their journey?
Yeah, no, it's a great question. It's like I'd actually like to step back a little bit, because you said, what if they want a coach? I would even go as far as, there's a lot of people that I meet and you say, why do I need a coach? I can hold myself accountable. I know how to set goals. I know how to go after what I want and everything. And so why would I, like you said, why would I even pay someone or do anything like that? And it's that age old metaphor or an analogy of an Olympic athlete, right? Do they get to the Olympics without a coach? No, you need someone to point things out. So for me, I know the power of coaching has been incredibly amazing, because I have a coach to basically hold up the mirror, to ask me the questions that I'm not asking myself, to help me look at myself and be like, asking those tough questions. How are you operating? Are you being your best self? Where are you getting in your own way? What's that inner gremlin in your head saying to you? What's your limiting beliefs? What are you going to do here? Look at new perspectives, new ideas. So there's a power in that it's called, I'm certified in coactive coaching, which is two people, when you come together, you come up with ideas that you neither would have thought of on their own. So that's another powerful piece of coaching. So that's the first part of my answer. And then the second part is, when you're looking for a coach, I think it's really what you're looking for. So are you looking for a mentor, which is, I think, different than a coach? A mentor has kind of been there, done that, just like the mentor in the book I wrote. He's been there and done that. So he can say, if you just do what I did, you'll be where I am, which is awesome and very valuable. And that's a mentor. And I think some people are looking for training and consulting, where they sign up for a coaching program, but it's more about teaching to learn a specific skill. And that's very valuable too. And then the third one would be looking for a coach who's more like that coactive approach, where it's someone who I first shared, and like what I've gotten from coaching is someone to ask the most powerful questions, someone who's intuitive, someone who can really help you shift your mindset and be your best self and operate at your best self. So that would be another type of coach, or a peer coach in my eyes. And sometimes it comes together. I'll say to my clients, do you mind if I throw on my consulting hat right now, or my mentoring hat? So they know that I'm stepping out of that pure coaching role and be like, I've invested in real estate for a while. I can give you some advice here. I'm not going to have you, go and search it and try to learn it elsewhere, when I've got it right here and I can share it with you. So I think that's it. It's like looking for, what is it that you want? What are you looking for? And that would be the first thing. And when I was interviewing for a coach and I've had several coaches over the past 25 years. When I interview a coach, I'm always coming from the place of like, what's the vibe? What's it feel like to be coached by this person?
Yeah.
Do they ask powerful questions? Are they really hearing me? And are they into my vision? I think what the biggest thing would be connecting with that coach and really, really noticing, like, is this coach really seeing my vision? Do they really get me, who I am and what I want and what's going to have me be fulfilled in my life and in my career? And it's just a sense thing. So you can get that. Sometimes you're talking to a coach and it's like, oh, this guy's or gal is just coaching for the money, just looking for another client. Sometimes you talk to a coach and it's like, wow, this person's really like wants to coach me. I'm their ideal client. And so you can sense that.
Interesting. And how should people be thinking about it for themselves if maybe they're not sure? If someone is just getting started out in this journey, they know they want to invest in real estate, that's the goal, but they don't know how to approach it. Do they need a coach? Do they need a mentor? Do they need a consultant? I mean, what are some questions that they could be asking or things they could be thinking about as they're starting that process?
It's great. I mean, experience. I would ask for experience, and I think it's great. You can definitely find a coach, or whatever they call themselves. They might call themselves a mentor, but it's like asking those questions and talking to that person. Just so here are some of my goals. I know that you invest in real estate. Can you tell me about your real estate background? What's your investment philosophy? What have you invested in? And I would even ask the coach, what's been your biggest challenge or biggest failure as a real estate investor? See how vulnerable and real they are, and if they're willing to to share that. And what's been your biggest win as a real estate investor, and what's your greatest strength? So I would ask some of those questions of a coach, and then also real estate investing is so broad, right? And so it's like, what do you specialize in? What do you know best when it comes to real estate investing?
Yeah. I love that you mentioned, tell me your biggest failure, your biggest flop. I had a mentor back in the day, and he said, I don't trust anybody without a limp. I'm like, yeah, because like the people that have only had successes don't know how to right the ship when things go sideways, and they will go sideways. They
will. Yeah. I know the people who got into real estate in 2010, 2015, who are just, knocking out of the park, and they think they're, superheroes. It's like, sometimes I'm like, oh, careful.
We're all superheroes in this, the last decade.
Exactly. Yeah.
Yeah. So Rich, talk to us a little bit about what you've seen some of your coaching students or mentees get right, and what have they gotten wrong? Because we have the beauty of hindsight now.
When it comes to investing specifically?
Yeah.
Wrong, and it's the same mistakes that Kathy and I made too. And I say you try to talk people out of it, and it's like buying an overpriced property in a non-landlord friendly state that is maybe slightly negative cash flow or just break even, and they're looking at it and say, yeah, but look at how this is appreciating. In 5 years, it's going to be worth this much. And it's like, no. So honestly, that's the biggest mistake I can see. And I can see it in single family all the way up to multifamily. Just speaking at these conferences and meeting with a lot of people who are doing multifamily, they think they're superheroes. They're doing this short-term lending, short-term loans and bridge loans and really dangerous stuff at this time in the market, because it's what's worked in the past. And they think that they're just like, well, yeah, it's like, I know it's only a 2% cap rate, but but that's okay because, so
it'll compress to 1 in 3 years.
Yeah, right, exactly. So there's something about that. Yeah. It's fundamentals. I think that's what it is. It comes down to investing fundamentals. And that's what we preach at our company. It's how we help our investors. It's just really coming back to the fundamentals. Make sure you're doing it right.
Yeah, that makes sense. And what about the other side of that coin for the folks that you've really just seen knock it out of the park? What are they doing? And you can't say the fundamentals. You have to pick a different answer.
Oh, that's great. I love that. Agreed. Yeah, what value is that? Really, it's the people who, what I've seen, it's the people who take the long-term game plan. They're the boring investors, the ones who are not trying to do this rapid growth and trying to 10x their portfolio or 20x it or whatever it is. So it's keeping that long-term perspective and just, making sure that you can control the properties through any type of downturn. And so the lessons learned that going through the whole recession, the Great Recession, and the whole mortgage meltdown and all that, big lessons came from that. And so that it's the people who take that long-term, continuously reinvesting too. So it's like you start this small portfolio, whether it's passive or active, and then you just start expanding it and expanding it and expanding it. And I would say that it's the people who focus on the overall cash flow, not just, weaving into appreciation, but looking at it like 5 years from now, this is what my portfolio will most likely be doing based on everything, even if there's a recession or whatever. And then looking out 10 years, looking out at 15 years. So it's that big picture and then reinvesting. The opposite of that would be I have some friends who were only flipping. So very transactional. And they had to find the properties, they had to flip it, and that's where their income was coming through, into constantly flipping it. And they adjusted, the wise ones and the smart ones adjusted and switched to the burst strategy. And so they started to find these properties, fix them up, but then they would hold them and rent them out. Now they're the ones that have amassed a good amount of wealth, whereas the other people who are flipping are still in the transaction game.
Yeah. And that makes sense. Okay. we've had a pretty good debate on this show over episodes about something called an alligator, which I don't know if you know Michael Zuber at all. He's an author of One Rental at a Time. He's a good friend of the podcast. But in his definition, alligator is any property that's negative cash flow. You have to feed it every month to continue owning it. Mm-hmm. So as you're talking about big picture, are you okay if you say, for instance, take out a cash out refi on a property to make that property A go negative, but to buy property B, and now your global cumulative cash flow is greater than that of property A alone?
I'm in the camp of no. No negative cash flow, and
no negative cash flow.
And I'll be completely honest and transparent that the house that Kathy and I were in Malibu before this, we bought it, we fixed it up, we bought it for $747,000 in Malibu, which is rare, hard to find.
That's like unheard of.
Yeah, well, it was a 1-bedroom, 1-bath, built in 1927, and we had to completely gut it and rehab it, and we put about $300,000 into it, and then we didn't get permits, so we got busted in that process. And now there's still a lien on title from LA County Building Department. And so we can't sell that place. And we can't even get a refi until we get those liens off title and get it all permitted and everything, which is that's a whole different story. Trying to get.
I'll say we could do an entire podcast series of just that.
Yeah, coastal commission and all that stuff. So,
oh my gosh.
So we have a tenant in there, and that's slightly negative cash flow. So that's like 150 to 200 a month negative cash flow. So, being completely honest, we do have a negative cash flow thing. It drives me crazy. And that house has gone up probably $400,000 over the last couple of years in value. So we could look at it that way. But we can, beyond that, everything that we hold is positive cash flow, even if it's just like $100 a month positive. That's fine. And if we're going to do a cash out refi, we make sure that it's appreciated enough where we can do that cash out refi and not have the loan payment, the PITI, go over what we're going to get for rental income.
Yeah, makes sense. Well, I appreciate you sharing the misstep and the vulnerability here on the show, but it wasn't intentional. That was just a series of consequences that had it be negative.
Yeah.
You wouldn't intentionally do that.
Yeah, we did bring it on ourselves, but yeah, it wasn't intentional. We didn't want to get caught.
I've played that game before too. It's a risky one.
Mm-hmm, it is, yeah. You're always looking out the window, and yeah.
Right, who's coming? Is today gonna be the day I get caught, or maybe tomorrow?
Exactly.
Yeah.
We were almost done. We were building the final deck in the back, and all of a sudden, this building inspector shows up. I'm investigating you because one of your neighbors called.
I was gonna say, but it was probably one of your neighbors.
Yeah, because they were cutting concrete, and it was so loud over a whole week. I think it just drove this neighbor crazy, and so it is what it is.
As a quick aside, one of the other hosts on the show with me, Tom, one of his neighbors called on him. He was adding a small prefab office ADU in the backyard of his property. Neighbor called. He gets in trouble. Same thing. Didn't pull permits. So now he's going through that whole rigmarole. But the funny part is the neighbor that called, Tom found out that their fence is on Tom's property. It's on the wrong side of the property line.
Man.
He's like, woo, thanks for calling and alerting me to that little fact.
Unbelievable.
So he's playing that game. How do I want to play my next hand?
The revenge game.
That's it. Best served cold on ice. Okay, Rich, let's wrap up here. I'm curious to get your thoughts. We are in this very unique time in our economy, in our market, in this country. And I'm just curious to kind of get your thoughts on what are you doing personally as an investor, and what are you doing in your business, and what are you telling your students to do as well? Absolutely.
Yeah. I have the benefit of being married to Kathy Fetke, who has been around for a while. She's on the On the Market podcast on Bigger Pockets. And so she's constantly doing her market updates. Every year she does predictions and has done that for the last 15 years. And then every quarter she does an investor update. And at the end of the year, she puts herself on the line and says, okay, here's what I predicted back in January. Let's see how accurate I am. And she's been really good. She's like almost 95% on her predictions, which is awesome. So I just listen to her. She's always interviewing experts, and she's connected with like John Chang from Marcus and Millichap, and so many just experts, like I said, with Kiyosaki and all that. So what she's saying, I'll just speak, because I get to hear through her office door when she's doing all her interviews and everything. She thinks that interest rates are not going to go up that much more, maybe even dip a tiny bit for mortgages and then maybe level off. But even though the Fed's going to keep raising the rate, the lending rate, mortgage rates can't kind of withstand that going up too much. So she thinks mortgage rates are going to hold around where they are. And then there's such a glut and such a need for properties and not enough inventory. It's like a whole different world than 2008, 2009.
Right.
So yeah, I think estimates are between 3 and 5 million homes shy right now for housing units. So inventory is still low. And also there's that whole thing where people are locked into these amazing interest rates, so they don't want to sell. So it doesn't make sense to sell something when you got a 3% mortgage or lower and go into a higher mortgage. So real estate is going to hold strong is what she's predicting. It's even going to increase a little bit. Rents are even going to increase a little bit, surprisingly, even with the economy and inflation. Rents are still going to go up a little bit. That's her prediction.
Okay.
And then a recession will hit, most likely sometime around late 2023, early 2024, but it will be a mild one, just kind of more of a correction that's needed.
Okay. And does either her or you think that there will be any kind of pullback in demand as folks go back into the office, or are we going to be seeing remote work kind of indefinitely, which I think was a big driver of that single family rental demand?
Yeah, that's a big one. Yeah. And the cool thing is, like, we have teams that are like the boots on the ground. So with 15 different property teams in our company that find properties. And we just did a mastermind with them in Tampa, Florida. And we spent 2 days and we really talked about all this exact same stuff. So it's something around not like a big hit on it. There still will be some availability, but not much different than if you look at today's current market right now. It's not going to be a lot different than that over the next year and a half.
So, for instance, we don't expect there to be much pullback in terms of demand because we're expecting people to continue remote working, basically.
There's definitely a return to the office. There are definitely companies that are saying, no, it's time to come back now. We want to look over your shoulder. We want to hold you accountable and all that stuff. Yeah. It's so funny because it's like the surfing lineups are getting a little bit lighter.
They're thinning out.
It's so funny. You go out and it's like, why are so many people surfing? Oh, they're supposed to be working. They think they're working.
Right. Their bosses think they're at work right now.
Yeah. So I'm seeing a pullback there. So that's my gauge.
That's so funny.
Yeah, but not as much. There's definitely, with so many people, how they've learned to use Zoom and GoToMeeting and being remote and all that stuff. We're in a new world. There's no doubt about it. So I think there's going to be a slight pullback on buyers and transactions and all that as far as the rate, but it's still not going to drop to like dismal levels.
Okay, sweet. Well, we will definitely have to stay in touch and see how you and your wife do on those percentages. Rich, this has been so much fun, man. Thank you again. If
Likewise.
People want to learn more about you, want to learn more about Real Wealth, where can they do that?
For the book, like I said, it's on Amazon, or if people want to learn more before they buy it, just go to thewiseinvestorbook.com. And then our website is just simple, realwealth.com.
Perfect. Well, Rich, thank you again, and I'm sure we'll be chatting soon.
All right, man. Thank you. It's fun.
You got it. Take care. All right, everyone. A big thank you to Rich for coming on. Super, super insightful. I know I learned a ton as a coach myself in what to look for in a coach and mentor going forward as well. So as always, thank you so much for listening, and we look forward to seeing you in the next one. Happy investing.